Microsoft and Target both announced big buybacks this week, as we've reported. And that's one of the ways that companies return money to shareholders. But it's also a way for companies to improve their earnings per share. Dominic Chu explains.
Whenever anyone says they're going to spend $40 billion on anything, they'll grab headlines. And that's exactly what happened earlier this week when Microsoft said they're going to start a new program to buy back up to $40 billion of their own stock, in addition to boosting their dividend payment.
Buybacks are important because it's one of the ways that companies can return money to their shareholders. One way, obviously, would be dividends, by which they send a check to the shareholders. But they can also buy back in shares, which lowers the number of shares outstanding and lifts earnings per share.
According to S&P Dow Jones Indices analyst Howard Silverblatt, the three biggest corporate purchasers of their own stock in the entire S&P 500 are Apple, General Electric, and Microsoft. In the 12 months ended in June, both Microsoft and GE had spent around $16 billion each on buying back shares. Apple was by far the biggest purchaser, buying back around $37 billion during that time span. But when it comes to which companies saw the biggest reduction in their share counts through stock buybacks, it's American Airlines, H&R Block, and Quanta Services. Each bought back enough stock to lower share count by at least 20%, thus helping companies improve earnings per share. The concept of stock buybacks has been somewhat controversial. Should companies be buying back their own stock or taking that cash and reinvesting it in the business to grow and hire more people? A big reason why companies can do these larger scale buybacks is because of how low interest rates are.
Companies can issue debt at extraordinarily low rates and then buy back shares, and that increases earnings per share. It increases the return shareholders get, and there's very little cost, again, with rates this low for companies to do that.
Now that the Fed has signaled that interest rates could stay lower for even longer, stock buybacks could continue to be a big part of the corporate profit story and help keep stocks higher. But the big question is how long that run can last. For Nightly Business Report, I'm Dominic Chu.